In today's version of Widow Wisdom and Wealth, you're going to meet one of my neighbors from my new town of Jenkintown. His name is Gary Coggin, and he helps with mortgages. He does. But Jerry and I kind of knew of one another before we ever had a conversation, tracking one another on social media, looking at one another's LinkedIn, because I had heard through the neighborhood about how great he was holding someone's hand through the mortgage process, whether that was a first time home buyer, a mom or dad looking to go down south. Listen tight, he has a southern drawl. It's really nice. But I really resonated the one day we sat down together because he's a man that lives in empathy. He's a man that lives in caring. He doesn't want to have anyone make a decision with their heart hurting or that, ball in the back of your neck. He wants everyone to feel calm and educated and understand their next best movement with their money, with their mortgages. And I just thought he'd be a joy for our widows and widowers out there because he's answering some of the questions that we all had in those early years of widowhood that maybe we can share when we know someone else that's going to be experiencing this journey. Because what we've leaned into is the fact that it's those of us with experience that can share and mentor and ease the road for someone else. That's exactly what Gary does in this ever changing conversation of mortgages. Give a listen. Hello, everybody, and welcome to another edition of Widow Wisdom and Wealth. Very happy today to have with us Gary Coggin. Now, not only is Gary Coggin a leader in the mortgage industry here in Philadelphia, he's also one of my Jenkintown neighbors. So, I'm going to tell you a little bit more about Gary. So, Gary has over 40 years of experience in the mortgage banking. Gary is dedicated to ensuring the smooth, well guided settlement process for every client. He understands that securing a mortgage can be complex, which is why he takes the time to listen carefully and clearly to explain each other's client options. Now, Gary has helped thousands of home buyers, home owners, realtors, and loan officers throughout his career to remain committed to being accessible, responsive, and informative at every step. In addition to working directly with clients, Gary shares valuable home buying insights and resources across his social media platforms, where he helps to educate and empower buyers through the process. Not only that, but Gary has his very own podcast called the Gary Coggin Mortgage and Real Estate Show. He's married to his wife Lynn. They have 5 adult kids. He's a Temple graduate, just like my boy Connor, but he did grow up down south. So that's a little bit about Gary. And for people who want to know why is Donna having a mortgage broker on Widow Wisdom and Wealth podcast, it's because Gary is a genuine soul. And after just meeting with him once and talking about him, I really think the wisdom he can share for our widows and widowers listening about how to navigate the emotions while understanding the mortgage process, maybe even a little bit about reverse mortgages and how that can work for some of our older widows and widowers that are trying to stay in their home. Things like this. It's the aspects of the finances. This is widow wisdom and wealth. This is the wealth part that sometimes you have to understand and get educated on and find that trusted contact. And for me, Gary, as a person, as a neighbor, is one of those. So welcome, Gary.
Well, thank you very much. I'm so happy to be here. I'm so excited that from our first conversation to this conversation, one of the things that drew me to reach out to you is that you have such a passion for what you do and the audience and your clientele. And I think we share that, because being in the mortgage business for 40 years, I kind of specialize in first time home buyers and helping people manage wealth through their cycle. That's by just virtue of being in the business for 40 years and having now doing mortgages for kids and grandchildren of some of my past clients 40 years ago. So it's a wonderful process, and I think we share the same values in terms of just making sure that people, as you said, are educated and empowered. I think that's really the key, whether it's a financial tool or a debt management tool, which I think mortgages are. And I have products that will create wealth within mortgage products. But I think it's just a wonderful process, and it's great to highlight that mortgages are a start to finish kind of a scenario. You have the first time home buyers that come into the market. They want to be educated because most of the first time home buyers that aren't homeowners now, it's simply because they don't know where to start. And I think that's clear on the other side of the spectrum too, as you and I have discussed, when you have a life changing event, you know, and that could be a death in the family. Oftentimes, there is one spouse or the other that managed most, if not all, of the financial instruments in the household. So there's a certain amount of panic. Like, you may not even know, like, what are the terms of the mortgage? How much is left on the mortgage? How do I mitigate not being able to make mortgage payments in transition from that life event to stabilization? So, and there are a slew of mortgage products to do that. So I think that's kind of what I'm here for today is to help you help your folks.
Okay, I'm just going to jump in with questions. Do you mind?
No, not at all.
All right, so these are some of the top questions I get from my recent widows or widowers. And now most of my widows and widowers, they have kids, right? They're like probably 10, 15 years into their mortgage. One of the main things they say is, okay, the house is titled jointly in our name. We still had a mortgage. The mortgage is in both of our names. What do I do? Do I just keep paying the mortgage? Do I need to move it into my name? Do I have to qualify again? Can you talk us through that one?
Sure. Well, in that scenario, losing a spouse doesn't necessarily like trigger a mortgage call so you're not in danger of someone knocking on your door and saying, we're really sorry that you lost a spouse. However, now you have to pay us all the money. It doesn't work that way. But I would say that when that happens, and I always preempt this because I'm not an attorney and I'm not an accountant, I always tell people when they ask questions about legal aspect or the accounting aspect is I'm neither of those. So of course, reach out to your attorney, let them know what's transpired. And then there are specific measures you can take. You can reach out to the mortgage service company and say, hey, look, there's been a change. We're going to be taking someone off the deed, and they'll tell you if there's a need to do anything other than that. Honestly, if you ignore it, nothing bad's going to happen to you. The only thing that happens bad, and I tell people when they read a mortgage, there's two major pieces to a closing package. One's the note, one's the mortgage. The note obviously is your promise to repay a specified loan amount at a specific interest rate. The mortgage is all of the bad stuff. The mortgage basically says if you don't pay, all of these bad things will happen to you, right? I heard a title clerk once say that the only thing you know about the mortgage is the big print giveth and the little print taketh away. As long as you continue to pay your mortgage, no one's going to knock on your door. But let's assume for a second that in that transition period, you fall behind. It happens, just the readjustment phase. And if that happens, then you can certainly reach out to your mortgage service company and say, hey, look, time out. Here's what happened. Most mortgage service companies will work with a homeowner. In the event that they won't, there are things that you can do with your attorney, put the entire process on hold, do whatever your attorney advises you to do, consult with your mortgage service company to help you through that process. Now, if it comes to a different scenario where maybe the payment is too high, if you have a loss of income that you can't replace, or if you need to take the equity out to do something else um, to assist in your process, that's more of a question for me. Like there are mortgage products for divorcees and widowers that are specific to their scenario. And depending on your age, that might be a reverse mortgage or it may not. If you don't qualify for a reverse mortgage, it doesn't mean game over. It simply means we have to look at some of the options, what best works for you as a single earner. And you can also use things like deceased benefits, surviving spouse benefits to help qualify. So there are a lot of things that can be done. I think the thing is finding someone, it all matters who you work with, right? So it's really finding someone that understands and is sympathetic to your plight that can help you through the process with knowledge and experience.
A lot of it, I love that you lean into that. It's the empathy, right? And I think that's where we both align of saying, like, this is where that person is. If I was in their shoes, or if this was my son or daughter, how would I want a professional to work with them? And for so many of our widows and widowers that are listening, it's a snowball, right? There's certain things you
Sure.
have to do, certain things you can hold off on, and to have someone else be aware of everything that's on their plate and how to slow the roll of that snowball when we need
Mm-hmm.
to is really important. Now, you mentioned reverse mortgages. I mentioned it in the very beginning here. And before we started recording, I shared like so many people think like annuities are bad things and reverse mortgages have bad connotations to them. Can you just display or give us an example of how that would work? Maybe for one of our older widows or widowers that want to stay in their house. Maybe they lost the pension of the spouse because It was single survivor, right? They didn't have a
Mhm.
survivor benefit on it. And now they need to find funding, and they've paid off their mortgage, or it's almost paid off, and this is where most of their equity sits.
So there are a couple of things. First, I want to say that if you are in a reverse mortgage with your spouse and your spouse passes away, that you're still good because it is a reverse mortgage. The only thing that happens is that you can actually have your spouse taken off the deed. You can maybe place someone else on the deed with you, but you don't need to really do anything. No one's going to come knocking on your door if you have a reverse mortgage that you have a spouse that passed away. The other side to that equation is if you need to refinance into a reverse mortgage or purchase another property with a reverse mortgage, which a lot of people don't know is even a possibility. Um, that product is dependent on age. So the older you are, because as you know, based on the charts and life expectancies and all that sort of thing. The reverse mortgage product works on those actuary tables. So the older you are, the more you can access in terms of your equity, right? So a 75-year-old person would be eligible for a larger percentage of the equity or the purchase price than say a 65-year-old person. So, and those variables change occasionally. So it's important to make sure you reach out to a reverse mortgage specialist if you think it'll work for you. They're great products because you know ultimately what you're doing is you're pledging your equity to the lender in exchange for some cash up front or a line of credit that you can use, and you are not responsible for a payment beyond that. I almost said you're not responsible for paying that back. You are, but it's in equity that erodes over time. So one of the fears that a lot of people have is, well, then when I pass away, there's nothing left for my heirs, or there's a foreclosure looming when I pass away. That's not the case at all. All you're doing is getting advance on your equity or leveraging your equity to purchase. And so what you end up taking in terms of cash out relative to the value at the end, should you pass away, your heirs still get that. So it's not like you're giving people like, well, I don't want to sign my home over to the government or to the lender. That's not at all how it works. That's a huge misnomer. And one of the biggest obstacles that we typically have with a reverse mortgage is not necessarily the borrower because they know they have a need, right? And they want it because they know it will benefit them either in access their equity or eliminate their current mortgage payment entirely. Um, the biggest challenge is when you sit with, invariably it happens, they have a couple of heirs, they have children, and they say, well, let me talk to my son or my daughter or both, and you end up having to have a consultation to educate the potential heirs on what happens to the property, what happens to mom or dad. And so that's why there's it's a longer cycle
Mhm.
for approval. And it's not because the mortgage process is any different. It's because there are other interested parties that have questions. So it's important to make sure you take everybody's concerns into account when you do that, right? So that's really the biggest challenge with reverse mortgage is make sure everybody understands that it's not a bad product. In fact, it's an excellent product, but it fits people depending on where they are in their life
Yeah.
when
And I
that
love that
need
you
arises.
educated the listeners on that part of it because it works very differently than many of us kind of understood it. And I also love that you lean into having that family conversation
Well,
because
you have to.
you do, right? Like this is part of that empathy and of working with the person and who influences their decisions, right? And remember myself feeling just so vulnerable with certain topics I didn't understand when I was a new widow. And to have somebody sitting there with me to hear the conversation too, and then to go back and have that professional be a leaned in resource for both me and the person that I brought to be my trusted source was really helpful because I'll tell you, a year and a half later, you're like, wait, what was that? Right? Like, let's go back again. Right. So I would have my trusted source with me. Sometimes it would even be my kids, right? Being like, hey guys, like, this is what I made the decision on to put the fence in the backyard because of blank, right? And then I'd be like, guys, why did I put the fence there? Right? Like that's how blurry things felt. But you're actually saying like because the next generation has a vested interest financially too. If there's a legacy consideration, include them and make sure that everyone's happy with this decision. And that could be one of the things that helps that widow or widower, if they're a little older, stay at home and to be able to support life at home, which is a huge impact for sandwich generation. So,
Sure. And there's two pieces to that. Like I said, you can do if you're in a home and you have a mortgage payment and you have equity in the property and you're of that certain age and it's optimal for you to do so, you do a refinance, you pay off the mortgage, and essentially you can get a line of credit for the equity, right? And so you have no payment because it's a reverse mortgage. You don't make a payment on a reverse mortgage. It comes out of your equity at some point in time. So it's almost a shared equity position that you have, if you want to think about it that way on a refinance. But it eliminates monthly debt and
mhm.
it gives you cash flow, based on the line of credit. And as your property value increases, you can increase that line of credit. So say you go to closing, if they say your line of credit maximum is $100,000 and the property continues to appreciate over time, you can expand that not to exceed the new loan to value, the new maximum loan amount. So it's a great product. I also have scenarios where people have passed away and they're like, I want to leave the family home. I want to sell the family home. I want to buy another property, maybe in another location, maybe just downsizing, but I'm not sure if I qualify.
Yeah.
You can also use a reverse mortgage to purchase. So
Ooh, I've
again,
never heard of
when you
this one.
it's a slightly unused mortgage product in my opinion. So it gives you the ability to purchase a new home based on how much equity out of the property you sell. It'll tell you, it'll again, actuarially will dictate how much you have to put down to buy that new property, never have a mortgage payment. So that's a tremendous resource for people who like, they're making there too many memories in the family home, right? Where you want to like, this is like, I'm gonna, I want to get out of here. I want to change the scenery. I want to move to Virginia where my grandkids are and not have a mortgage there, right? You can do that. So a reverse mortgage purchase is a great product. I did one a few years ago for a gentleman who was in Chicago, selling his house in Chicago, selling his business in Chicago. Once he sold his house and sells his business, he has no measurable sources of income to move to Florida. So we put him in a reverse mortgage because he was like, I think he was 72 or 73 years old. So he sold his family home, he sold his business, he put some money down on the other property that he bought in Florida, never had to make another mortgage payment in his life. And, should he pass away, his children will have the balance of the equity of the home in Florida.
Wonderful. All right, so let's go back to little old Donna, 13 years ago, right when my husband passed. And yeah, I was not making the income he was making. I was making about 17,000 a year. And we had only purchased a home about 3 months before he passed. And 2 years later, my kids were like, "We can't stay in this house, Mom. This is where Dad died. We gotta go." So as a mom, I'm like calling the real estate agent, putting the sign up front, being like, "All right, we're gonna go somewhere." I was so scared that how am I going to qualify for a mortgage? How is this going to work? And I really needed to lean into my mortgage broker to educate me on, okay, where are my flows of income? I had Social Security to help take care of the kids. How old were the kids? Can you talk that situation through
Sure. So,
for
so
some of the
assuming you
listeners?
have, yeah. So if you're selling your house and you're in that, you know, drastic, dire situation, and I feel really sorry for your story. Just makes my heart palpitate every time I hear your story. Such a sudden life change at such a young age. But so in that scenario, as a mortgage broker, say, okay, you're going to sell your house. What are you realizing in terms of equity? And what do you have in terms of income? Do you have surviving spouse benefits? Do you have an annuity? What do you have exactly? Because there are a lot of things that can be used as a source of income. Now, this scenario didn't involve necessarily death, but I have one actually going on right now where where a borrower that's 73 or 74 years old, she wants to move out of a condo because the condo fees kept going up, and she's buying a single family property, literally a quarter of a mile from where the condo is, ironically. But She had sources of income. So we were able to piece together a little bit of Social Security, a little bit of pension. She was still a little bit short on what was required to qualify, but she had an annuity. Now, it wasn't an annuity that paid monthly stipend, draw, or dividend, whatever you know the plan refers to it as. Um, so I suggested to her that you call and find out, can you take lump sum distributions periodically without penalty?
Mhm.
So Doc said that you can take $20,000 a year without penalty. So that's really not a source of income per se. It's not a monthly payout. But I was able to convince the underwriter that what difference does it make to you as an underwriter? She can take 20% a year. Why can't we use that 20%, that 20, I'm sorry, 20,000 per year and put it into an account and use that as income, even though it's not a monthly stipend? Why does she still not qualify? And so after some discussion on that, then they did, come around to my way of thinking. So she didn't have to liquidate her annuity to throw it on the property as a down payment. So the balance can continue. Her particular annuity has some reinvestment value as for as long as she leaves it in. So she could take the money out without penalty up to 20,000. And that's how we got her qualified. We actually took that asset that is not an income producing asset and turned it into an income producing asset just by having the right conversation with the underwriters.
Yeah. And I love that you bring that up. It's because of your personal relationship with the homeowner or the person looking to buy the home and to qualify for the mortgage that you then start to understand all the flows of income and where they might have savings and where we might be able to go ahead and position them well and to have that conversation with the underwriter. I think a lot of people are, one, private and a little shy to share their financial information for someone they don't trust, someone they don't
Right.
know as a fiduciary, someone that they haven't built that rapport with. And I think that's something that might make the way you work, Gary, a little bit different than some of those big mortgage companies where everything's online, right? And sometimes people feel safer being behind the screen, being online, and just seeing do the numbers work. But when, just in this example, right, the number from the annuity wouldn't have been considered on a general application, right? You had to dig a little further. You had to see how that annuity structure or how that other piece of finance worked for you. And I love that. I love that you're able to have that relationship with your buyers to be like, all right, let's work together as a team. And one of the first things that you and I had talked about when we first sat down was the people that really want to buy a house, right? And they're like, well, I don't think I can. I don't think it's possible, right? And the way you work with them to develop their credit scores, to develop their income and where they're saving over a few years, that 2 or 3 years later, yeah, they are. They're able to qualify. And I think that's a gift.
Well, that literally happens every day. I mean, there's so many first-time home buyers that they really just don't know where to start. Like, oh, there's no way I'll be able to afford a home because I just had it with my own daughter. She wanted to buy it. She sold her house in South Philadelphia. She wanted to buy a house in Jenkintown, so she's going to be one of our neighbors too, very
Woohoo!
shortly.
It's a promised land. Go
Yeah,
ahead.
and she was like, "There's no way, we can buy a house. I have some student loans, and I have, there was a wedding recently, and we paid for some of it. She paid for some of it. She has some credit card debt." I said, you have a good job and you have a good credit score. I think we just need to rearrange your financial picture so that my job is to make you look favorable in front of an underwriter. So you might have self limits you impose on yourself unnecessarily. Let's look at the big picture and see if we can move some of the chess pieces around, put you in a favorable light for an underwriter. Now, I can do that for you or anybody else, but the question is, you have to be comfortable with the bottom line. I can do all that, but if I say to you, and the payment is going to be X, and you go, oh, I could never make that payment, then it doesn't matter what I tell you can afford if you're not comfortable with the payment, right? So a lot of times it's home buyers just don't know where to start, and they don't know where the challenges, how the challenges can be overcome from sometimes it's multiple challenges, but it can be done. And I tell people all the time, it's like, look, I have 5 kids. If you're a first time home buyer, I'm going to tell you the same thing I would tell one of my kids. Like, if my daughter had said to me, well, look, I saw this mortgage product and it's a bad mortgage product. I'm going to tell you, I won't put you in it. Right. If it doesn't work for you long term, then it doesn't work for you.
Yeah. And I love that you bring up like that emotional part of it, right? All of us have a money mindset. Like what are our yeses, what are our nos, what are we comfortable with, right? And that's one of the pieces of being a really qualified professional and a nice person, right? That you actually will take that next layer down and really figure out how do they make their money decisions. Just going back to the family table, who's helping them make those money decisions? Who's
Right.
impacted on that? And I think that's very, very wise. I didn't think we'd be doing mindset and money, money, money mindset at the same time,
But but
Gary.
but you'd be surprised the number of people that will say, "Well, I can't possibly afford to buy right now, and I want to save some money. I want to talk to someone and see what I can do to put myself in a position to buy next year."
Yeah,
When you look at their overall financial picture and you say, "We can move this around, we can move that around," you can take part of your 401k and pay off a credit card that's 19%, and then pay yourself back in your 401k over time at peanuts compared to what the credit card debt was. But when you move those pieces around and then you tell them you're pre-approved now, I understand you want to buy next year. You'd be amazed at the number of people that say, "Well, then can I just buy now?"
yeah,
So it's just a matter of it's mindset. Once you realize what you can do and it fits into your comfort zone, then it shortens the timeline and the arc of when you can start building wealth. Because I feel that owning real estate is a wealth building adventure,
yeah.
not just shelter.
I'm glad you bring that up because so many people, because yes, I invest into the marketplace. Yes, I have models and we make trades, mutual funds, ETF, stocks, all of those things. I highly encourage so many of my clients to consider real estate as another ballast to their investments in the marketplace. I myself have probably about a third of our wealth in real estate, right? Because it's just a different functioning tool, right? And a lot of it is too, like, our parents, at least my parents, their goal was be mortgage free, right? And sometimes that is a great goal to have, but sometimes it's not always the best use of your money. And how you can have your money work for you because it's not just being debt free. It's about enjoying life. It's having a quality of life. It's being able to help your kids with that wedding if that's what brings you joy. So, how do you make joyful decisions with your money? So, well done. I love it, Gary. All right, we're going to sum this up because most of our listeners are in the car driving through. We want to make sure they can do it during a whole listen to this podcast during their commute to work. What top three pieces of wisdom would you have for your kids if something like this happened to them in reference to, okay, they're married, they have young kids, here comes widowhood, didn't expect it, you're in a house, there's a mortgage. What's the first step?
Well, like I said, the first step would be to reach out to your attorney and your financial advisor like yourself, because you're going to have some input that I wouldn't have. But if your concern is mortgage, my suggested first step is to, if you have a mortgage person that you know and trust, reach out to them. If you don't have one, find one. Interview them. Don't just, don't go to a call center. You know, find someone. Interview several mortgage professionals and find someone that you have some compatibility with, right? That can really help you with that process. And then there's a deep dive. Then we have to look at all of your intrinsic financial liabilities and opportunities and structure a deal that works for you.
Yeah. And I love that bringing in all the professionals together. First, go to your lawyer, then go to your financial professional, then let's sit together. Because I'm often used as a trusted contact to sit in the room and take the
Of
notes
course.
and just digest the information, to have that recall, because everything kind of works together in a symbiotic nature. As you said, the 401k with the mortgage, with the debt management, with the ability to send our kids to private school if we want. These are those decisions that we're making, and everything interlocks. So, well done.
Yeah. So my first recommendation would be, don't panic, and then start to reach out to the people that you know, like, and trust.
Yeah. We always say when you're interviewing someone, go to the people that maybe have been in the same situation and say, Who do you know who, right? That's how I
Right.
found my first financial advisor after my first husband passed. And we had one at the time. But I went to another widow that I, in my mind, was like, wow, she's got four young kids and she's doing okay. She seems like
Mhm.
she's got it together financially. She doesn't look panicked or lost or scared. And I said, who do you use as a financial planner? That is how I found my first financial planner. Interviewed a ton, asked that question to others. So I love that you say that. Know, like, and trust. Who do you know who? Get the recommendations and go that way. So, and well, you have Gary on your list now too. Gary, how do people get in touch with you? We'll have all of your LinkedIn, a link to your podcast in the show notes. Any other best way to get in touch with you, my love?
Just call me 215-275-4402. I'm old school. I answer the phone, it rings, I answer. You have a problem, I try to help you with it. It's that
I,
simple.
I love it, Gary. Thank you so much for being here today, and thank you to all of our listeners of Widow Wisdom and Wealth.
Thank you so much for having me, and I look forward to some reciprocity. You owe me an appearance on my podcast as well.
I will get there. I will open up that calendar, Gary. We're coming.
Awesome. Thank you so much. Appreciate it.
Thanks.